Hey everybody, David Screek. I hope you had a great long weekend. So we're gonna be really back into it this week. There's a few things I'm working on, and also like it's tough to come up with consistent new ideas. Because look at doing stock chart of the day. Not only do you have to have ideas, but you have to have ideas that get clicks, right? So I know I have a lot of gold and silver, um, like bugs or whatever you want to call yourselves, bulls. And I know that my gold and silver videos tend to be the most clicked on ones, but I can't talk about gold and silver every single day. And then a lot of the stuff I like talking about, sometimes I like talking about individual stocks when they have earnings, but I notice they don't have the great clicks. My favorite videos personally are I like the great trades in history, like the one I did in Jim Chanos or John Rambo, Malden, those type of things. But again, they get pretty low clicks. So it's probably something that interests me more, but I'm gonna still do stuff because if I think it's good content, right? So anyway, today we're going to look at semiconductors. We talked about NVIDIA last week. So we're now in Semiconductor Bubble 2.0. I remember when they were in the, when, we had the internet and chips being made for computers and that sort of thing. Because obviously the internet drove more demand for computers. I still remember in 1996, right after I graduated from high school, my graduation present was kind of a new computer. And my dad basically gave me the option. He was like, you're going to get one or the other, either a CD-ROM, because that was a big thing at the time. You could rip stuff on that. You could play music on your computer, had a little speaker plugged in. It was a big thing at the big, big deal at the time, or an internet that, built-in connection. And I said, well, I want the internet. So I was ended it being a great thing. But that's why, a lot of, everyone, people had computers before them. But once you went to the internet, like, I remember having a computer and writing some, things on it and printing them off and handing them in, reports and stuff in high school. But this was like, again, pre-internet days, you weren't plugged into the internet. You just kind of did it. And then you printed it off and you were using floppy disks and stuff like that. Right. And then the internet changed all that because now it was like, you can be online 24/7. You could go research stuff. There wasn't as many resources as there are today. But you can still do stuff on the internet, start doing stuff on the internet. So that drove demand computers because all of a sudden everyone needed one. I remember when I started writing my newsletter in 1998, I was a physical newsletter. And in about 99, 2000, I moved it online. So it was like, most of the newsletters I was getting in the mid 90s when I got interested in the markets at a young age at 18 were physical newsletters. So anyhow, I just wanted to show you this. This is a great, so this is a chart, shows you. So what I'm trying to say in a nutshell is all of a sudden there was a huge demand for PCs, computers, because the internet meant like almost everyone wanted to be online, right? And remember, this is really pre-smartphone days. Like the BlackBerry was just coming in, but like, even BlackBerry was really just more for like emails, right? So, and then there was email too. So everyone needed a computer or laptop to do that thing. And I remember, the HP or Compaq, these were the big companies at the time, Dell, etc. So anyhow, you can see that here. You can see the SOX. This goes back 25 years. Let's go back even 30 years. And we see the SOX, went from the 98 correction from about 200 to nearly to 1500. So it went up over sevenfold in about a 14, 15 month period. So like, you can see that huge move there. And, in it, and then it collapsed. And then, really didn't break out until about 2017, 2018. Shows you what happens when you get a bubble, right? And then now we're kind of in the 2.0. We're like, if we now take I have the log scale, because I wanted to show you that bubble. But now you can see it looks like nothing now. But now you can see this here. We did recently, now we'll get a shorter term chart so we can see the recent move. We did recently break out above these highs here. So I think this breakout will continue. It's up another percent. You can see today, obviously NVIDIA is the head player, but it also some of these SMCI and AMD, they're doing well because all back on the AI boom. So, I talked about maybe having this correction in the spring followed by a blow off into the summer. I think this would be the index to watch if we do get that kind of blow off. And like I said, we are breaking out and hitting new highs here. So, and it looks like it was a longer consolidation or shorter consolidation, sorry, than this one here, right? And by the way, this is why I plan on getting very defensive in the summer. And the reason is quite simple. If we look at, again, that August, September period, right? We're going to look at that here. Like even last year in a very strong year for the markets, there was a correction. Even if, you can see that here too, August to October, of 2022 and even 2021. Again, we'll go back to 2021 just to show you this. And a very strong year for the markets in 2021. You know, you can see the markets again, August here, October. All three periods had a correction. So in two of those years, 2023 and 2021, were extremely strong. So I'm going to get extremely defensive this summer, right? So you know, and everything, and you know, I might even, I don't know if I really want to sell gold stocks, but I might buy, you know, some dust or something, you know, something as an inverse ETF, like maybe equivalent of 5-10% of my position in gold and precious metal stocks as a way to do it. So anyhow, then we're going to go on to, I have a new sponsor company called Vortex Metals. They're doing a webinar tomorrow. So this is a copper play. What I like about Vortex is, if we go quickly look here, is that it's a new play. Like I don't even think they have a stock charts. Let's see. Oh, they do now. Okay, so that's new. So anyhow, that's good. And you can see it has moved up pretty good as of late. And it's a copper play in Chile, and it's the same management, Mike Williams, as Aftermath. And Mike tends to do very, very well early in bull markets. You can see this just started trading in 2022. It's kind of just been in a range of about 18 cents to about 8 cents. More of the range is more like 9 to about 16, 17. So we're getting towards the top end of that range. And just to tell you, I'm still down on this thing because, you know, the markets were so bad. I bought this in 2021 on a pre-IPO at 20 cents. But like it has moved up nicely, and that just shows you how, you know, weak the markets have been. Usually you make money in pre-IPO, so it's not really the company's fault. It's just, again, that's the way the market has been. You can see it's up. Yesterday was up on very small volume because we had that holiday day. So anyhow, they have this copper deposit in Chile. You know, and a gold and silver deposit or silver deposit in Chile is what drove Aftermath. And let's just quickly look at Aftermath. I just want to show you what this is why I like new deals. New deals don't have the hang up. They don't have, you know, the huge share structures. They don't have people that bought in at the last cycle that now maybe have to sell. So this is Aftermath, you know, which we bought in an 8-cent financing here. The only reason it came down here is that's when the COVID crash and everything crashed. And then you can see what Aftermath eventually did. And Aftermath is still doing well. It's 40 cents a share right now. You know, and it's kind of broken out of this base. But more importantly, it was Aftermath here. And maybe Vortex could do something kind of similar in the coming months and years, that it's a new deal. And like copper, as we all know, has been doing very well. You know, I talked about being too, you know, it has come back here recently, but still at these copper prices, you can still do very well. You know, copper on itself, I still think it's kind of too early, but like as long as copper is above $4, you're basically fine in a copper play. So anyhow, for those of you interested, I'll be on the webinar, and they're going to talk about their exploration, you know, their exploration goals, and also they recently did a financing that was oversubscribed. So that's today's stock chart of the day. I hope you enjoyed this. Again, we talked about how another excuse me, another semiconductor bubble. Looks like it's in the making. If you wanted to short it, this is probably the way to do it. The semiconductor ETF. That way you're not, you know, trampled on by NVIDIA just trying to short that. And the puts on NVIDIA are very expensive. So that would probably be the way to do it. Because it's a basket of them, and you know, so that would probably be the way to short it. And I don't know if the SMH, we're gonna let's go just quickly look at 25-year chart. I love this new thing on stock charts. Yeah, it was around there, and you can see, you know, what it did. Let's zoom in on that. Actually, we'll just get the log scale so we can see it better. Yeah, you can see the SMH went from, this is just 99, went from roughly 10 to 40, and then collapsed back to $5. So I know everyone thinks NVIDIA is unstoppable now, but look at all parabolic curves collapse, like I've always said. And it would not be surprised if we see another 80 to 90% meltdown in semiconductors once this bubble bursts. So, okay, everybody take care. And I hope you're all doing well.